think you were on mute.
You were on mute too. I just unmuted.
That is mute.
Now you should be off mute.
Sign of the times.
Let me ask him to unmute here. He is unmuted.
And with.
I'm texting IT right now.
Might have a sound off.
Leave and accept. And let me see if I can get rid of. I'm gonna put it back on you. Or leave it. Commissioner Johnson, can you hear us?
Yes, can you hear me?
Yes, thank you.
Thank you. Yep, one more minute. Okay, good morning, everyone. I've got 9 o'clock. We'll call the June 25th Nevada Tax Commission meeting to order. Call roll for me, please.
Commissioner Littman,
Present.
Commissioner Bursey,
Here.
Commissioner Brown,
Present.
Commissioner John,
Here.
Commissioner Johnson,
Oh, here.
Commissioner Wren,
Present.
Commissioner Byram,
I'm present.
Commissioner Witt,
Present.
and Chairman DeVold.
And I'm present. Okay, this time I'll take public comment, no more than 3 minutes. If there's an item that to
Am I the only one who can't hear?
If you're on the telephone or Zoom, please dial *9 to be put into the queue. Phone number ending in 527. You may provide public comment.
Thank you. My name is Neil Jones for the record. And I ask that the statement be included in the minutes of this meeting. My public comment is to raise concerns with the Tax Commission regarding the financial practices of Nye County and the town of Belmont, which, with the full knowledge and backing of Nye County, defrauds the government of tax revenues. I realize that this is public comment and no actions may be taken at this meeting. I have submitted a written public comment for this meeting. The town of Belmont does not exist as a legal local government, governmental entity, city, incorporated town, unincorporated town, or even town as defined by statute. As is very clearly shown in the backup materials for this meeting, there is no local government taxing unit for Belmont listed for Nye County. Belmont has no budget, has never had a budget. The Department of Taxation has no records of the town of Belmont. This non-existent entity is allowed to purchase and own properties in Nye County. It did not pay transfer taxes on the sale of the property and does not pay property taxes as mandated by its statute. According to the advisory board for the community of Belmont, these properties were purchased with monies from Nye County, of a budget from Nye County provided to them. Nye County denies that Belmont has ever had a budget. This phantom entity of the town of Belmont is somehow a tax-exempt entity. Nye County cannot or will not provide any information as to who makes up this entity of the town of Belmont and who would be accountable and responsible for its actions. I'm asking the Tax Commission to investigate these practices and place this issue on an agenda for their next meeting so that we may have an open, transparent dialogue regarding this entity and its tax-exempt status. In all fairness, the town of Belmont should be informed and invited to participate in this open discussion. By allowing this to be on the agenda, all parties may show up and participate, present facts, evidence, and documentation. I will follow up with an email request for inclusion on the agenda of the Tax Commission. Thank you for your time and allowing me to raise these concerns to you. I look forward to being able to address and provide documentation to the Tax Commission at your next meeting. Thank you.
Thank you, Mr. Jones. We'll take it under consideration as whether or not it's added to the next Tax Commission agenda. What we will do, committee.
This is
Young, would you go ahead and make sure that that happens?
Yes, thank you.
I'm understanding that some of you online could not hear me when I invited public comment. At this time, is there any public comment? If so, Tina, please dial *9 to be included in the queue.
See any additional public comment at this time?
Okay, very good. At this time, Director Young, would you administer the oath for all those that plan to testify today?
Yes. Tax. You are attesting to tell the truth in the proceedings. Thank you.
Okay, very good. The next item on the, is there any additions, corrections, or motions?
One motion to approve the minutes.
Second.
Got a motion by Commissioner Brown, seconded by Commissioner Wren. All those in favor, please signify by saying aye.
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 Aye. Is there anyone opposed? Okay, next item is the consent calendar. Is
Hi, excuse me, this is the court reporter, but the chairman keeps cutting out. I'm getting only half of what you're saying.
I'm sorry?
That whoever was speaking keeps cutting out. I can't get everything that he's saying.
This is Commissioner Bursey, same here.
The court reporter.
the court reporter?
I let IT know that we're having low bandwidth, and I think that's part of the problem.
It's our issue, do you think?
I'm wondering if my experience has been that if we turn off our cameras, that might help it.
For those of you that are online, we're going to take a 5-minute break and ask IT to help us with our low bandwidth issue. Commissioner Johnson, can you hear us okay now?
Yes.
Commissioner Byram?
Yes, I can hear you now.
Okay. Commissioner Bursey?
Yeah, I can hear.
Okay. And the court reporter, I don't know how much you got of any of this.
Not a lot. I mean, I got the majority of it, but you did cut out when you were speaking. But now I can hear you.
Yeah,
And
it seems like,
I got full comment. I got the gentleman's full comment, Mr. Dillon, I believe.
okay. And my comment was that we would refer the matter to the Committee on Local Government. And we would defer on whether or not we would add it to the next tax commission agenda. Waiting for that report back from the Committee on Local Government. Okay. It still looks like our network bandwidth is low. So we'll try and be short on our comments as possible. And for any of those commissioners that are speaking, if you could please identify yourselves, that would be helpful for the court reporter. Okay, let's go back and return to the meeting. The consent calendar, is there any items that anyone would like to pull for further conversation? Okay, I'll start with Commissioner Brown.
Thank you, Mr. Chairman. I'd like to pull item 3B, line A, number 15, groupware technology.
I don't think they could hear you.
I'd like to pull item 3B, 15, which is groupware technology, Inc.
Good morning, this is Stacy Thompson. Are you able to hear me?
Yes.
Perfect. Thank you very much. So my name is Stacy Thompson. I am with Groupware Technology.
Thank you. Could you hold for just a few moments? We're still working on items that will be pulled from the agenda, Ms. Thompson, so we'll call for you in order, please.
You got it. Thank you.
Thanks so much. Any other items to pull?
Yes.
Commissioner Wren.
I'd like to pull F2, James and Nicole Dean.
Okay. Any commissioners online, would you like to pull any items for further discussion? Okay, hearing none. The items I would like to pull is the entire group of D 1 through 7. Approval refund requests in excess of $250,000. Okay, hearing no other items from the consent agenda, is there a motion to approve the consent agenda with the exception of item 3B15, D1 through 7, and F2?
Commissioner Witt, so
Go ahead.
moved.
Second.
Okay, I've got a motion from Commissioner Witt, a second from Commissioner Wren. All those in favor of approving the consent agenda, please signify by saying aye.
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 Anyone opposed? Okay, let's go back to item 3B15, and it looks like Melissa Gardner is available from the Department of Taxation, and I see Ms. Thompson is there. So Commissioner Brown, your question.
Thank you, Mr. Chairman. My question is really for the department. And in the document, in the briefing package, it's page 112 of the package. It shows that the total amount of tax, penalty, and interest is $310,837.12. But in the briefing document, it says the amount paid by the taxpayer is $340,501.45. So I just don't, I'm having a hard time reconciling that. The document is for a waiver of penalty and interest, but it appears that the taxpayer is paid about $30,000 more than the total tax, penalty, and interest. So maybe the department could just explain what the discrepancy is or what's transpired.
Good morning. Good morning, Chairman and Commissioners. This is Melissa Gardner with the Department of Taxation. And that was identified that group where it looks like they did overpay the amount that was due. And I do not know necessarily the reason for that, but any overpayment would be refunded to the taxpayer.
Motion.
Okay, make a motion to approve.
Commissioner Lippman seconds the motion.
Thank you. I've got a motion by Commissioner Brown and a second by Commissioner Lippman to approve item 3B15 on the consent calendar, groupware technology. All those in favor, please signify by saying aye.
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 Anyone opposed? Okay, Director Young, I see we've got a list of people for items D, but, you know, like I say, maybe in the future, if we don't include that in the consent calendar, anything over $250,000 for approvals of refunds or credit requests, let's move those outside of the consent calendar. So we'll, I'll let you go ahead and chat about those.
Okay. So thank you, Melanie Young, Executive Director, for the record. The first item under this agenda, the approval of refund credit request in excess of $250,000. The first taxpayer is Winship Trading LLC, and the Department of Taxation has Brandy available to provide testimony. And do you have a specific question in regards to that?
I don't, no. I just feel like we should talk about them in open meetings when they're above 250.
Okay.
So maybe just, Brandy, if you could just walk us through the issue, that would be terrific.
Randy, if you're on the telephone, you can dial *9. Oh, there she is.
If she's not available, I can provide some information.
Okay.
Can you hear me?
Yes.
This is Brandy Delaney, last name Delaney, Tax Program Supervisor for Excise. Winship Trading resides in Nevada, and they paid floor taxes on everything in their inventory as of January 1, 2020. This business in particular sells about 90 to 95% of their business outside of the state. Therefore, taxes are no longer due on product when it's sold outside of Nevada. And we have since changed the form so that this issue will not arise. However, they are allotted a refund for all those taxes for everything that was shipped out of state.
Okay, very good.
Okay, so we'll move on to the next agenda item. This is Melanie Young, Executive Director for the record. Agenda item number 2.
And could we take all of those insurance companies in a group? Because it sounds like it's kind of the same particular issue that they overpay. Is that a good statement? So I just had a question on that.
Okay.
So.
Thank you, Melanie Young, Executive Director for the record. The next items we will take under this agenda topic for the approval of refund of credit request in excess of $250,000 is agenda item number 2, Sierra Health and Life Insurance Company. Agenda item number 3, CSAA General Insurance Company. Agenda item number 4, American Zurich Insurance Company. And agenda item number 7, Zurich American Insurance Company. And the department has Brandon Mackey available. Thank you.
This is Brandon Mackey, Tax Program Supervisor with the Nevada Department of Taxation Excise Section. I am available for questions regarding these accounts.
So Brandon, help me with something. It looks like we do this on a consistent and regular basis, that we've got these big insurance companies that overpay, and then we hang on to the money, which I guess I'm not opposed to, but it seems like there's got to be a better way to collect those taxes rather than them overpaying and us sending them money back on a consistent basis. Is there anything in the works that would help us maybe stop this constant refund of major dollars? Like I say, not that I'm against it. If they want to send us a bunch of money and we hang on to it for free, that's one thing. But is there a better way to do this, Brandon?
So Brandon, if it's okay with you, I'll take the question and comment to the chairman. Again, Melanie Young, Executive Director for the record. This, and I agree with you, this has been an ongoing process here. And what I'd like to do is have staff take a look at the matter and see if there's an alternative solution that we can come back and present to the tax commission at a future meeting, if that works.
And it sounds like they're basing this off an estimate that's really, they consistently overpay, it feels like to me. Okay. All right. Thank you.
Thank you.
All right. Number 5.
Moving on to this same agenda topic, approval of refund credit request in excess of $250,000. Melanie Young, Executive Director for the record. We will hear agenda item 5, OS Operations Abate. And the department has Jennifer Roebuck available.
Good morning, Chairman and Commissioners. This is Jennifer Roebuck with the department for the refund request for OS Operations Abate. The one we're on?
Yes.
Thank you. Okay, the taxpayer filed a timely request for the refund of tax for July of 2020 period. They submitted amended return, sample of internal invoices for the transfer of inventory for resale, and a resale certificate from their customer. The documentation supported the claim that it had transferred inventory from itself to another subsidiary of the parent corporation, and in any case, the sales were for resale and should not have been reported as taxable sales. The tax was paid and it remitted by the taxpayer, and it was not collected from their subsidiary. Thus, the overpayment is valid and the refund is due. And any more detailed questions, I do have Guy Childers, Audit Manager, available for detailed questions.
And Jennifer, this is related to their operations with Bentley, Nevada. Is that correct?
That is correct.
Okay. All right. Thank you.
All right, thank you, Melanie Young, Executive Director. Moving on to the last and final agenda item under this topic for the approval of refund credit requests in excess of $250,000. We will move on to agenda item 6, Mirage Resorts LLC. And again, the department has Jennifer Roebuck available.
Thank you, Jennifer Roebuck with the department. Let's see here. So this taxpayer filed a timely request for refund by submitting an amended return for several periods, April of 2018, June of 2018, through September of 2018, along with documentation to support the claim that use tax was remitted for transactions that sales tax was already paid at the time of purchase, and on one transaction that was abated. So the supporting documentation was reviewed by the department. If you have specific and found to be valid. If you have specific questions, I have Laura Dorobantu, Audit Supervisor. I believe she is available for detailed questions on this refund request.
Okay, thanks, Jennifer. It looks like use tax was paid on the purchase of vehicles, which is not subject to tax. Help me out with that. Are they used outside of the state of Nevada, or why would they not be taxed on the purchase of vehicles?
Laura, are you available?
Good morning. I am available. This is Laura Dorobantu, Audit Supervisor in the Henderson office in the Compliance Division. And the taxpayer paid use tax only because they didn't realize at the time that they paid sales tax directly to DMV. There was no other issue. The limousines are used in Nevada.
So it wasn't a sales tax, it was a use tax that was paid.
They paid both. They reported use tax to the department, and they paid sales tax to DMV.
I see.
Yes.
Okay. All right. That was all of my questions on those. Can I entertain a motion to approve item 3D 1 through 7?
Motion to approve.
Commissioner Littman seconds the motion to approve D items on the consent calendar D 1 through 7.
Okay. Got a motion by Commissioner Brown, seconded by Commissioner Littman. All those in favor?
Aye.
Aye. Aye.
Anyone opposed? Okay, motion's approved. Next item is 3F2, James and Nicole Being.
Thank you, Mr. Chairman. This is Commissioner Wren, and I guess my comments and questions are for Lizette Arcero. This was her case.
This is Lizette Arceo. I'm present.
Okay, great. Thank you very much. So on this case, my concerns are, this started back in 2015. The taxpayer owes a total debt of $251,405, taxes of $106,635, $13,269 in penalty, interest of $131,500. They started their original offer in compromise in 2015 and offered $1,000. It doesn't appear that anything happened for 5 years. In 2020, they came back and offered $12,000. Apparently, you negotiated with them to bring that up to $30,000 to be paid within 5 years. My concern with this is that in 2018 and 2019, these taxpayers went out and bought brand new vehicles in the amount of $46,000 with payments of $832.67. So in that 5 years that transpired between 2015 and 2020, it doesn't look to me like they were working on the best interest of paying off $251,000 worth of debt. And first of all, I'm glad I don't have your job, okay? It's hard, but I just have a hard time dealing with this type of case where it appears that these are relatively young taxpayers. I don't think it told us in here, but it just seems to me like, you know, if they can afford that kind of new car payments, and everybody needs reasonable transportation, I understand that, but everybody doesn't need a new car. I don't even have a new car, okay? Which is fine. So, you know, I guess my question is, in your negotiations, how do you deal with that? And, you know, tell me why we're not actually getting more money out of these people. I mean, this is a pretty big debt we're writing off.
For the record, Lizette Arceo for the department. And Commissioner Wren, you bring up some really valid points. Those are the points that we bring up to the taxpayers when we're discussing and negotiating any offer in compromise. We bring up, you know, if they purchase a new home, if they purchase vehicles, if they're sending their kids to private school. These are all the things that we bring up during our negotiations. And when we get to a point where the department's recommendation is to approve an offer, we do leave it up to the commission as well to ask these questions. And we do ask the taxpayers to be present, because it is just a recommendation and we do make that very clear. One of the issues we had with this one, as you have stated, is the length of time that the offer and compromise was pending. In addition, when I was talking with Ms. Roberts Larson and through their attorney, there were times where they were not making any payments during that length of time as well. So if the commission feels like we need to renegotiate or continue negotiations on this particular case, we obviously will definitely do that. But this is as high as the taxpayers were getting through their attorney.
Okay, and I appreciate that. And you know, the other thing I want to bring up, besides the new automobile purchases, going through their financials, they spend a tremendous amount of money eating at fast food and, you know, things that if you're a whole lot of money, maybe you ought to be saving some of that money and cooking at home type thing. So, you know, that answers my question. Mr. Chairman, I would make the motion to deny this offer in compromise.
Okay, very good. Is there a second?
Commissioner Bursey seconds.
I've got a motion by Commissioner Wren, seconded by Commissioner Bursey to decline the offer and compromise in item 3F2, James and Nicole Bean. All those in favor, please signify by saying aye.
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 Anyone opposed?
Nay.
Nay.
Commissioner Brown, Commissioner Byram vote no. Offer and compromise is denied. Okay, Division of Local Government Services. Before we go on, I apologize. I promised that we would let two of the people know that we have pulled two items from the agenda. My apologies, Director Young. Alan Silberstan, Gamblers Training Company, and Miss Rodeo America have been pulled from this agenda. So if you're on the telephone, you're free to go. And then anyone that's on the telephone that had any item in the consent calendar, you're also free to go to hopefully free up our bandwidth. Hopefully that was polite. It meant to be that way. So I didn't mean to be rude there. So anyone on the consent calendar, item 3A through F, your item has been approved and you're free to leave this meeting. Okay, item 4, Division of Local Government Services, Director Young.
Melanie Young, Executive Director for the record. Moving on under this agenda item for local government services, it's the certification of ad valorem tax rates for fiscal year 2021, 2022 pursuant to NRS 361.4547 in the Department of Taxation. Has Kelly Langley available. Thank you.
Good morning, Ms. Langley.
Good morning, Commissioner. For the record, Kelly Langley, Department of Taxation Supervisor for Local Government Finance. In your packet today, we have a copy of the proposed property tax rates for the Nevada local governments for fiscal year 2021 through 2022, also known as the Red Book. We've reviewed all of the proposed tax rates and we can recommend to you that they are all within statutory limitations. I'd like to draw to your attention Roman numeral page 3 of the Red Book entitled Property Tax Revenue Dollars Projected. This page includes the assessed value statewide, including the net proceeds of minerals of $146.3 billion. That's up from prior year of $139.8 billion. We project this would generate approximately $4.69 billion pre-abatement from property taxes, up from last year's $4.45 billion. The school receives.
Sorry.
Can we hold on one moment? If we turn off the microphone, I don't know if the people on Zoom can hear.
I apologize.
Okay,
I'm sorry.
Keep going. No, you're not the one that should be sorry.
So this, as I was saying, the school gets the lion's share of the property taxes, about 38.8%, and the state receives approximately 5.3%. This information is prior to the abatement calculations, which are shown on Roman numeral page 4. On the very last page of the book, you will see the table of the tax cap factors. The residential tax cap is set at 3%, but for all other properties, the tax cap depends on the county in which the property is located. Each county has a general cap factor based on the higher of either the 10-year rolling average growth rate in assessed value or twice the CPI, which was 2.4%. The statewide average for the general cap this year was 6.7%, up from last year's 5.8%. The department requests the commission certify the combined tax rates as submitted. The combined tax rates are reflected in section A, column 5, and section B, column 9 of the local government finance property tax rates for Nevada local governments, the Red Book. At this time, I'd be happy to answer any questions you may have.
Thank you. Any questions from any of the commissioners? Commissioner Rigby, or I'm sorry, Commissioner Byram, you're on mute.
Can you hear me now?
Yes.
I did not receive a copy of the Red Book in my packet.
Sent separately.
It came from Shaylee.
Yes, it was in an email from Shaylee Spurlock.
It's titled different too. It came out up as FY 2021-22 NTC.
I could probably then look in my email, but I wouldn't have time to review it, so I'll just abstain. I just looked in the WinSIP and it's not in WinSIP either.
Okay. Any questions from any of the other commissioners? If not, I'll entertain a motion.
Motion to approve.
Commissioner Lippman seconds the motion to approve.
Got a motion by Commissioner Brown, seconded by Commissioner Lippman. All those in favor, please signify by saying aye.
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 Anyone opposed? Commissioner Byram, I'm assuming you're going to abstain, correct?
Yes.
Commissioner Byram abstains. It's approved. Thank you, Ms. Langley. All right. Director Young.
Thank you, Melanie Young, Executive Director, for the record. Moving on to agenda item number 5 for the Compliance Division. That agenda item A, the department's recommendation to the commission for the denial of an offer and compromise pursuant to NRS 360.263. The first taxpayer under this agenda item is Joanne Reckling, and the Department of Taxation has Adrian Roberts Larson available.
Good morning, Mr. Chairman and members of the commission. This is Adrienne Roberts Larson for the record. I do not expect that Joanne Reckling or her former counsel will be participating in the call this morning. Joanne Reckling has submitted a request for offer and compromise on To Go by Joe Catering. The business operated from November 2008 through September 2012. The outstanding debt is $101,639.86, which is comprised of $46,223.66 in tax, $8,772.96 in penalty, a $15 fee, and $46,628.24 in interest calculated through the end of this month. The taxpayer's reason for the request is doubt as to collectability, and the offered amount is to pay $2,000. She first submitted an offer and compromise request to the department in February 2013. From the time of submission through 2015, the department worked with Ms. Reckling to obtain necessary documents. At that time, the department sent a 30-day letter to her in which she did not respond, and that particular offer and compromise request was closed. On February 23, 2018, she submitted a second offer and compromise request through her representative. The offer was to pay a total of $11,129.25. And again, the reason was for the request was based on doubt as to collectability. Again, the department mailed a 30-day letter to Ms. Reckling in 2020 requesting updated documents, to which she did not respond. Later, in December of 2020, the department did hear from her representative inquiring as to why we had not made contact with them. We responded by working with that representative to obtain the documents that are before you today. And in their submission, the request and the offered amount was lowered to the $2,000. The department reviewed her information and found that she has multiple sources of income from a operating ongoing Las Vegas-based internet business. Ms. Reckling responded that she would not be providing additional documentation to the department. After several requests, the department did inform Ms. Reckling and her counsel that without the information, we would not be able to fully review her offer or make a recommendation for approval. With that being said, the department does have a personal lien on Ms. Reckling that secures all of the debt. The department has weighed the cost of what out-of-state collections would be as she does split her time between Nevada, Oregon, and the East Coast. And it would be financially responsible for and in the best interest of the state of Nevada for the department to continue to pursue collections according to the financial information given to us. Therefore, it's recommended that the commission deny the offer for sales and use tax periods November 1st, 2008 through September 30th, 2012 due to her reason of doubt as to collectability. And I'm happy to answer any questions the commission might have.
Thank you. Any questions? Actually, I first want to make sure, is Joanne Reckling or anyone representing Joanne Reckling on the telephone or online?
If Ms. Reckling or her representative is on Zoom or the telephone, please dial 9 or raise your hand. Thank you. I don't see anybody.
Okay. And this is Adrienne Roberts Larson again. Just to give you a little more information on our contact with them, is we do have good email addresses for both Ms. Reckling and her former counsel. We were informed this week that he is no longer representing her. In that email string, he did copy her in and had confirmed it was a good email. We made sure that a copy of the notice and we did request if she would please let us know if she intended to participate or not, but we did not hear back from Ms. Reckling.
Okay, very good. Any questions of Ms. Roberts Larson? Commissioner Brown.
Thank you, Mr. Chairman. Just a comment. I appreciate the work that the department did on this, and you don't get to come ask for a workout from sales tax that you've kept and refuse to provide documentation. That's not how it works. So I intend to support the department.
Is that a motion?
Yes, sir.
Go ahead.
I second the motion to deny the offer and compromise and also join the choir in supporting the hard work of the department in thoroughly analyzing and investigating this offer, especially with the multiple state issue and just weighing in the cost of that. So thank you.
I would agree with that. Okay, I've got a motion by Commissioner Littman, seconded by Commissioner Brown. All those in favor of the denial of the offer and compromise for Joanne Reckling, please signify by saying aye.
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 I,
Anyone opposed? Okay, very good. Director
Thank you.
Young, next item. Thank you, Ms. Roberts-Larson.
Thank you, Melanie Young, Executive Director, for the record. Moving on to the next agenda item under the Compliance Division is the taxpayer's appeal of administrative law judge decisions pursuant to NRS 360.245 and NAC 360.175. The first taxpayer under this agenda topic is Spring Mountain Driving School LLC, and the Department of Taxation has Vivian Rakowski, Deputy Attorney General, available for testimony. Thank you.
Thank you, Director Young. Good morning, Mr. Whittemore. I understand that you're representing Spring Mountain Driving School, and this is your appeal of the administrative law judge's decision. Go ahead and make your case. Thank you.
Thank you very much. And good morning, Chairman DeVold and members of the commission. For the record, my name is Chase Whittemore. I'm a partner with Argentum Law, representing the taxpayer Spring Mountain. And with me today, behind me, is Mr. John Morris, who's the owner of Spring Mountain, and with us as well as the general manager, Dave Petrie. First, just want to say thank you very much. I know you all spend a lot of time away from family and loved ones and your regular jobs to do this. And so just want to say how much we appreciate that. So to understand this case a little bit better, you have to understand a little bit more about Corvettes and the different makes and models. So you have the Corvette Stingray, you have the Corvette Grand Sport, the Z06, the ZR1, you have different trims of the Stingray, you have different seat options, you have the convertible and coupe. That doesn't include all the different color options, the electronic options for increased speed. And why is this important? Well, if you went down and flew to Vegas right now and you drove out to Pahrump, you went to Spring Mountain, right now on their facility, you'd have over 100 Corvettes on property, parked outside and on display. So to put that into perspective, your average car dealer might have 2 or 3 Corvettes. Most dealers don't have any Corvettes at all on their lot. And so you can understand why Spring Mountain is so unique and such an incredible and special dealership. And dealership we are, so make no mistake, Spring Mountain is a dealer, both in fact and in law. NRS 482.020 defines dealer. We fall directly under that definition. We are also a dealer in fact. Exhibit A is our dealer's license. And there's only one type of dealer license in the state of Nevada issued by the Department of Motor Vehicles. So if you went online right now, looked up our license is right next to Dolan Toyota and Finley Chevrolet. And the department and the ALJ, they try to recast our business and say, you know, you're not actually a dealership. And look, we understand it's extremely important for the department to get as much tax revenue for the state as possible. And I understand it's a hard job. But in doing that job, sometimes it is easy to be hyper-focused on getting tax revenue, and sometimes they put their blinders on. So much so that you miss the forest for the trees. And I understand where the department is coming from, because Spring Mountain is unique. They are right. It does not look like your typical dealership. We do not do a bunch of TV advertising, constantly bombarding the local news. We do things differently, and we should celebrate that, not punish them. So we are a unique dealership, but our core part of our business is selling cars. Yes, we do not spend hundreds of thousands of dollars per year in TV advertisements. Yes, we don't spend money on overhead on Corvette salesmen, but there's no better way to sell a Corvette than to get someone behind the wheel at a racetrack and show them how it drives and performs. This driving school is just a bigger and better way to demonstrate the vehicles. It's unique. And this uniqueness is what helps us compete against the likes of Ferrari and Lamborghini. And the perception that those are very fast cars. Everyone knows that. Ferrari equals speed and luxury. Well, that perception is tough to compete against. So what do we do to compete? Well, we decided to build a racetrack to allow people to drive Corvettes at extremely fast speeds in a controlled and safer environment. Nevada doesn't have an Autobahn. We have to compete and do things differently. And that is what we do. We market, advertise, and sell differently. But to do those things differently doesn't mean we should be treated differently under the law. We still sell Corvettes. In fact, we sell more Corvettes than almost every other dealership in the United States. So we might not do a bunch of TV advertisements, but look at our results. We sell between 3 and 15 Corvettes per month. That is a huge number for a single dealer. You know who else sells 15 Corvettes per month? The entire country of Canada. And we sell these for a profit. And if we did not sell these vehicles often, just like with any other dealership, GM would cease doing business with us. So where does that land us? Well, NAC 372.305 applies specifically to vehicle dealers. So we're a dealer pursuant to our license and pursuant to the law. And unfortunately, the administrative law judge, if you look at her decision, her conclusions of law start on page 9. Through the end, she does not mention one time NAC 372.305 in her analysis. So she failed to properly analyze the proper code pursuant to our licensed dealer status, and that was an abuse of discretion. This code, NAC 372.305, states that if each use is made for the purpose of demonstration and display while holding the vehicles out for sale, then that use is not taxable. That's slightly different language. If you look at NRS 372.185, which applies to use tax, the imposition of the use tax, which applies to the storage, use, or other consumption of tangible personal property. So there's a slight different language. So what she should have done is analyze this case under NAC 372.305. She failed to do that. That is abuse of discretion. So what is a demonstration? It's not defined in code. It's not defined in statute. So we have to take the commonly understood meaning of demonstration. It's a practical exhibition of how something works. That's the commonly understood meaning. So when you look at a typical dealership, a demonstration would be a test drive. So you go down to Kia and you might try out a Kia Sorento or a Subaru Outback. Regular everyday cars you take around the block. Play around with the electronics, the temperature, make sure everything works, right? Well, Corvettes are different. They're meant to be driven very fast. A regular test drive around the block going 35 to 45 miles per hour, it's not the best marketing tool to sell them. In fact, most dealerships around the country don't even let you test drive Corvettes without some prior relationship that you've bought a tremendous amount of vehicles with them or you put a down payment on it. So what better way to sell Corvettes than get people to test drive them on a closed course racetrack? So imagine if you're a dealer trying to sell performance high-speed cars. Would you just open up a lot, hire salesmen and start ads on TV? Or would you build a racetrack? The core of our business is the same as any other vehicle dealer. Trying to sell more vehicles, to push metal. So what is Spring Mountain School? The entire school is just one big demonstration. We demonstrate the capabilities of the Corvette. We show people the different colors, the different seat options, the different trim options. We explain how each one is different horsepower, different handling and braking. We explain all the component parts, the machinery that goes into these high performance vehicles. That's in the classroom setting. And then when they get outside of the classroom, they get to drive Corvettes on the racetrack. That's a test drive. That's the very definition of demonstration, a practical exhibition of how the Corvettes work. And the ALJ and the department admitted it was a demonstration. The ALJ just said, well, you're generating revenue from that demonstration, and it's considered a marketing activity. Well, if you look at the code and the statute, nothing about demonstration includes any reference to revenue, profit, expense, or loss. The code states that if the use was made for the purpose, it equals not taxable. When Nevada basketball goes and plays every year against some team from Australia, people still go and pay and see it. But that's still an exhibition. Even though the department, the athletic department's getting revenue from that, that's still an exhibition. So again, the ALJ was incorrect to say that you cannot receive revenue from a demonstration. So let's talk about use for a second. We do not use the Corvettes to take joyrides down to the Vegas Strip. We don't use the Corvettes to drive home every night. We don't use the Corvettes to catch a drive-through movie. No, we use the vehicles to demonstrate. They are used as a practical exhibition. So there were other numerous findings of fact and conclusions of law that administrative law judge got wrong. The substantial evidence showed, well, she made a finding of fact that the test drives are not open to the public. Because the auditor said, well, I drove there and I saw the guard gate. And so that must mean that Spring Mountain's closed to the public. Our general manager testified that is there for safety reasons. It's not to prohibit access. There are many facilities out there. There's a giant racetrack with lots of races throughout the year. We can't have people wandering onto the property, not knowing where they're going, especially onto the racetrack. So we have to point out where not to go and where you can go. And so the guard gate isn't there to prohibit access. It's just to help with traffic and safety reasons. What else did she make a ruling on? The ALJ said that the test drives are solely for existing customers of GM. That's not right. Our general manager testified that these occur to everyone, not just current owners of Corvettes. And even still, if some of them are, some of the students that do go there are owners of Corvettes, but I'm sure all of you own a car. Do you think Dolan Toyota cares if you own a car right now? They want you on their lot. They want you behind a vehicle. Because if you own a Toyota today, maybe you'll own a Lexus tomorrow. That's the same with these Corvette owners. Maybe you got the color wrong. Maybe you got the seat wrong. Maybe you got the electronics wrong. Maybe you want another Corvette with another 150 horsepower. Everyone who goes there is a prospective purchaser until they say no. Everyone is a prospective purchaser until they tell you no. What about on display? So display. The ALJ made a finding of fact that was simply made up whole cloth. That in preparation for the hearing, Spring Mountain specially arranged the Corvettes so as to appear the vehicles were being displayed when in fact they were not. That is the finding the ALJ made. And the basis for that, Exhibit 4. Exhibit 4 are photos I took the week before the hearing. I never once told my client, hey, go out and arrange your vehicles so that I can take pictures so we can pull the wool over the eyes of the ALJ. That is absolutely not true. In fact, our general manager testified that those photos were an accurate depiction of the Corvettes on almost every single day throughout the year. But what did the administrative law judge do? She took what the auditor said over what our general manager who's there every single day said. That's an abuse of discretion. So what do we know? We know that Spring Mountain is a vehicle dealer, according to statute and according to the DMV. We make regular sales every month. They're not just one-off irregular sales. They're routine, regular, and integral to our business, meaning these Corvettes are held out for sale. 3, we demonstrate and display. We do not use them in any other way. So we would respectfully request that the commission reverse the administrative law judge and find that the department was incorrect to assess use tax on all of the Corvettes and Camaros. And there's another issue on the sales tax for the Wolves and Radicals. These are sports cars, race cars that are imported overseas. We're the only importer in the United States of these, and we make regular deliveries. So NAC 372.712 says any entity making regular deliveries out of state, that the department must accept sales invoices that have out-of-state addresses as evidence that the vehicles were shipped out of state. Now, our records, some of them were incomplete on the sales tax for these Wolves and Radicals. Absolutely. But others were not. And others showed specifically that a number of these cars were shipped out of state. Yet we're assessed sales tax on those. That's not right. And so with that, Chairman DeVold, I'll stand for any questions or if the department is next.
Thank you, Mr. Whittemore. I believe Ms. Rakowski is online as well. Do you have a rebuttal, Ms. Rakowski?
Thank you, Commissioner. Good morning, Commissioners. My name is Vivian Rakowski from the Attorney General's Office. I represent the Department of Taxation in this case. I know you've read all of the documents and it was a pretty big file, so I'm going to try to just address some of the issues that they've raised this morning. The first thing, Spring Mountain Driving School is a driving school. They are not a Chevrolet dealership. They testified that they do not sell, that they are not a Chevrolet dealership. Of the 300 and some odd cars that were at issue here, every single one of them, after their use in the driving school for more than 6,000 miles, for an average of 240 days, were shipped to one dealership, DC Motors in Los Angeles. There was not one retail sale of a Chevrolet Corvette. There was not one test ride to a member of the public. They had no records, they had no special plates, they had nothing and they admitted during the hearing that they had nothing that showed that they ever gave a test ride to somebody. In fact, when their general manager testified, he said that, yes, we give test rides, but it's part of the driving school. Now, the driving school is under a contract with GM Chevrolet, and they sell these Corvettes and a few Camaros to Spring Mountain Driving School at 40% less than a dealer, a franchise dealer will pay for these cars. And the purpose is that they will teach safe driving to owners of Corvettes. And in the packet, you'll see advertising for the Corvette Owners Driving School, which is what they do. People buy a Corvette, they pay maybe $1,000 and GM subsidizes the rest of the tuition so they can go to Spring Mountain and drive those Corvettes and learn to handle them safely. And the contract is very specific. It says Spring Mountain Motorsports Ranch will utilize the Chevrolet purchased vehicles to conduct and execute courses offering specific student instruction in high performance driving, and they go into the different courses. That's the purpose of the contract and the relationship between Chevrolet and Spring Mountain. Spring Mountain is not a Chevrolet dealership. They have never sold a Corvette to any retail person that they provided a jacket to the department. They're trying to change this to avoid use tax. Now, use tax, as you know, is applied to the performance vehicles because of the promotional contract with Chevrolet requiring them, and they're required to purchase a certain amount of Chevrolets Corvettes every year. And then after they use them, they have to keep purchasing every following year. So they have to have a place to dispose of the ones that are already used. So they send them off to DC, they sell them to DC Motors, and the general ledger that the auditor saw that they provided showed sales of those cars to DC Motors. Now, if you look at the bills of lading that they included in their packet, the bills of lading show the condition of those Corvettes after 6 months of driving, and they all had pings, they all had scratches. They were not in the kind of condition that you would sell to a retailer. So they sell them to DC Motors at a good price. DC Motors fixes them up and then retails them. But Spring Mountain is absolutely not a Chevrolet dealer. So after they order them, they first of all, when they ordered them directly through GM. They place the order for the different kinds of cars that they want, the different colors. Then they have to put the Ron Fellows driving school, performance driving school decals on them, and they pick them up. But the cars are delivered to the Pahrump Auto Mall, and they pick them up from the Pahrump Auto Mall. They bring them out to Spring Mountain and they use them for the driving school. As I said, the testimony shows that they're mostly people who are owners already of the Corvettes. They're learning how to drive them. They testified that they don't advertise cars for sale. They don't have a showroom for the performance cars. They do not have any salespeople that are on staff or licensed by the DMV, and they do not have any for sale signs on the performance car. So there is no way that even a student would know that any of these cars are for sale. They have no used car stickers on them, which are required by law. They have nothing that would show that any of these cars are for sale to the public. And if they will, so use tax is acceptable, is applicable here because their first use of the vehicle is in the driving school. And that's where use tax comes in. They use them. Then when they get done and they have to replace them, they wholesale them out or they sell them to DC Motors. They totally ignored this contract, and the contract that's included in their documents showed the relationship between them and General Motors and Chevrolet. They do have the Corvettes on display. That picture was taken right before when Mrs. Donorsi testified that he was out there and there were cars all over the place. They were not arranged like that. No matter how they were arranged after the order period has nothing to do with what was happening during the order period. It's a private club. I can't go up to the gate and say, I want to see a Chevrolet for sale. They're not going to let me in. They do have a dealer's license, but as I said, they've never sold a new Corvette. Okay, with respect to demonstration display, I think that's fairly covered in the briefing, but they left out the full definition of demonstration. And a demonstration is something that you demonstrate to a prospective buyer. And since these people already have these cars, they are not prospective buyers. And as I said, with the test rides, the regulation requires a list of the test drive, the information that they're supposed to keep file on who gives a test drive, when the car was test drive and everything. They had testified that they have none of these records because they actually have never given a test drive that was not to a student that was paying tuition. And they don't, okay, so that, and if you have any other questions about the use tax, I'd be happy to answer them. I think that as the commissioners, you're fairly familiar with the demonstration display regulation. I think we've discussed it in the briefs, and although they're showing the people how to use the Corvettes, they are actually using them in the driving school as a teaching tool. So their first use is, and they're subject to use tax. With respect to the sales tax on the Wolves and Radicals, during the hearing, their witnesses testified and agreed that the delivery of those particular race cars that they import were made in Nevada. In other words, the car comes, they order the car comes into their facility. They set the car up, they do whatever further information, tuning up and everything they have to do to get the car ready, and they deliver it. The customer comes to the facility at Spring Mountain, and the car is physically delivered to them. They take physical possession of these race cars in the state of Nevada. These race cars are not allowed on the street. These are all off-road, so they're not allowed on the road. So they are subject to sales tax as tangible personal property. There were several cars during the redetermination period that they were able to provide documents, either affidavits and stuff from purchasers who showed that these things were shipped out of state. And in 2019, which was a year after everything had happened, the department did a redetermination and gave them credit for every single one of the cars that they could either show that it was contemporaneously taken out of state at the time that it was purchased, or if they had a good information to show that this car was removed from Nevada. But most of the time, these cars are stored in garages at Spring Mountain, and then the person from out of state or out of the country comes to Nevada and uses the car on the track. They may ship the car to another track, as they testified, but the car comes back and is stored in Nevada. Now, there were sales receipts. They're saying these receipts should be proof in and of themselves, but they're not because many of the receipts had no addresses. The ones that had penciled in later addresses, nobody could testify as to where the addresses came from. Some of them were going to the 21st floor apartment in Midtown Manhattan. Some were going to California with nothing else. Others were going to Canada with no documentations for customs or anything else. There were several sales to Nevada. No sales tax was collected or remitted. Now the sales tax on these vehicles should have been, and these cars could not be driven anywhere outside of the property because they're not allowed on the road. They testified that their customers arranged for transportation or they pick them up themselves. Now, according to the statutes in Nevada, if a person purchases something in this state and is delivered to them in this state and they take possession in this state, the sale occurs here. And even if they subsequently remove it, the sale still occurred in Nevada. Not to mention that not one of those customers ever provided a receipt showing that they paid sales tax for this property in another state. So there's no danger of double taxation. They also advertise that they have used race cars for sales, which have been exclusively maintained by Spring Mountain. Well, to exclusively maintain them, they would have to have been stored on the Spring Mountain property and used there. So in essence, the taxpayer has not met its burden to show Spring Mountain's normal course of business is the sale of performance cars. Instead, it's obvious that Spring Mountain Driving School is a driving school. They're subsidized by GM to teach safe driving to Corvette owners. The race cars are tangible personal property subject to sales tax. Spring Mountain does not deliver the car out of state, but instead by their own admission, they deliver the race cars to purchasers at the Spring Mountain facility in Pahrump. Based on the evidence in the record, the department respectfully requests that the commission affirm the ALJ's decision. If you have any questions, I'd be very happy to answer them. Thank you.
Thank you very much. Do you have some rebuttal for?
Thank you, Chairman DeVold. I do. So Ms. Rakowski brings up the fact that these vehicles, while being demonstrated on the racetrack, occur some on an average of maybe 5,000 miles, 6,000 miles on them, which if you're thinking about a regular test drive around the block at a typical dealership that takes 10 minutes, you're going to rack up maybe a couple hundred miles max at a typical dealership. Not at Spring Mountain. Spring Mountain, you're doing an all-day course, sometimes 3-day course, with all the test drives on a racetrack going up to 200 miles per hour. That's a lot of miles you're going to put on a car very fast. And that's the reason for the discount. That's the reason why GM Chevrolet sells at 40% below discount, because they know that that's going to rack up a lot of miles. But according to law, these cars are still new vehicles when they're sold. They're new vehicles under the law. Law says if they're not titled or unregistered at the time of sale, and somebody then goes to the DMV out of state and registered and pays sales tax at that point, that's a new vehicle. So when we ship them to DC Motors in LA, who acts as our broker to effectuate the sales, they're still new vehicles. So it's akin to a DC Motors, akin to you are at, let's just pick on Dolan Toyota for a little bit. You go to Dolan Toyota, where does the sale take place? With the salesman on the lot during the test drive. That's when the sale actually occurs, right? When you say, yep, I want to buy it. I'm in the car driving it, I like it, I want to buy it. That's when the sale takes place. And then what happens? They say, okay, here's the finance manager. Go over there and fill out some paperwork and make sure that your financing lines up and that we can get you a loan. That's where DC Motors comes in. The students at the driving school, they go and the sale takes place at Spring Mountain. When you get in the car and you're going 150 miles per hour in a Corvette and your hair's on fire. That's when the sale actually takes place. And then we ship them to DC Motors, who effectuates the sale. Who makes sure that the title is transferred to the buyer and the buyer registers, typically in California, but sometimes in Nevada. You have Nevada buyers go to DC Motors. You have people from Canada, from Mexico, from all over. Buy through them, finish the sale through them, and register the cars and then pay sales tax on that. And this whole thing about, well, they can't be doing test drives because they don't have any records. She's talking about a different statute. NAC 372.305, she's talking about subsection 3. Subsection 3 applies to loaner cars. When the dealer makes a loaner vehicle out to somebody, that's when the dealer must have, take down the VIN number and the stock number and the number of the special license plate. We don't have special license plates. It's not possible for us. We're on a closed course racetrack. We don't drive it on the highway. They're not test driving on the highway. So that statute, that subsection 3, we're not talking about that. That's not our universe. So the fact that she's bringing up they're held for longer than what subsection 3 allows for, doesn't matter. That's not the universe we're talking about. We're talking about subsection 2 of NAC 372.305, which says a use or loan. A loan means the gratuitous transfer. So we're not talking about a loan. They pay. So it's a use. Now we're in subsection 2, is not taxable to the dealer if each use or loan of the motor vehicle by the dealer is B, made for the purpose of retention, demonstration, or display of the motor vehicle while holding it for sale in the regular course of business. So everything after that in subsection 3 doesn't apply to us. So her constantly bringing up, well, you don't have records for the test drives. You don't have a special license plate. That does not matter. It's not applicable to us. The deal jackets, same with the deal jackets. DC Motors has all the deal jackets. They're the ones that effectuate the sale. They're licensed by California. They're not licensed by Nevada. The cars do go through Pahrump Valley Auto Mall. That's because they were there first. They were the Chevrolet dealership first. Chevy can't have 2 Chevy dealerships in the same town of Pahrump. It's not allowed. It's not allowed. So when we go to order cars, we order them through GM Chevy. We pick out which ones we want, all the colors, all the options, different trim, all the models, making sure we always have a ton on our lot so that anyone, and she's wrong, she could, Ms. Rakowski could absolutely go to the gate right now in Vegas and they would take her on a test drive or through the lot and look at any color of Corvette she wants or any of the seat colors. That's what our general manager testified to. So this whole idea that the guard gate is there to prohibit entry is just false. It's false. It's the department looking for tax with the blinders on, not seeing this as a unique business model, but the business is still the same. The core of the business is still the same. We're making sales regularly and routinely. And that's what matters while holding it for sale in the regular course of business. What does that mean? It means, are you making sales routinely and regularly? And is it a customary practice of your business? That's what that means. And we meet all of those. So every element of subsection 2, we meet. The Wilson Radicals, delivery in Nevada and taking possession in Nevada, we submit right now, we will pay sales tax on that. Absolutely. John Morris would tell you right now, he's here today. Absolutely. We will pay sales tax on that. The ones we ship out of state though, that people don't take possession of, the department has to accept the addresses as evidence. That's what the regulation says. That's what the statute says. And so with that, Chairman, I'm ready to answer any of your questions.
Okay, very good. Let's bring it back to the commission at this point. Is there any questions from any of the commissioners? And it looks like Commissioner Byram, you're up first.
I do have a number of questions. So let me start first with Ms. Rakowski. The decision by the administrative law judge in the conclusion upholds the earlier assessment, which would include all 3 issues that were being argued in front of the hearing. So that would include the sales tax on the fuel tax, which had been withdrawn after the hearing took place in the memorandum after the Attorney General opinion was brought up and reviewed. That was withdrawn, but it appears that in the decision that was upholding all of the previous assessment. So could you clarify that? Because I just want to make sure that the fuel tax portion is not part of what was being ruled upon.
When the issue was originally before the ALJ, the fuel tax was argued. It was afterwards, opposing counsel brought in that opinion at the hearing. We hadn't seen it before. So we made the argument after the hearing. We withdrew it after looking at that AGO and realized that the fuel tax would not apply because of that AGO. So that's been withdrawn, and any assessment that goes forward pending, the results of this hearing will not include anything that had to do with the fuel tax.
Okay, but I think technically the administrative law judge should have addressed that was a withdrawn issue, and the dollar amount associated with it plus penalty and interest should have been excluded and made more clear, because as it stands now, she is concluding that is being upheld as part of the assessment, so that it's not pulled out, it's not discussed, it's not in the decision. So I wouldn't be able to approve the decision first for that reason.
So we could ask her to amend her decision, or she could amend her decision and remove that assessment based on information that was received following the hearing. And it could be done that way, or if you were to decide to approve the rest of the other two issues, you could approve as to those two issues, or one or two of those issues without the fuel tax.
Thank you. I have a question for Mr. Whittemore. Are there spectator stands where people can come and watch the demonstrations and the races?
Thank you for the question. If I remember my time there correctly, there is very limited viewing of the racetrack is there for races and test drives. So there are races throughout the year, actual race competitions there throughout the year, and there are different garages and different things, but I've never seen any grandstands where people can go. No.
Okay. I'm just trying to picture that, if that was part of the demonstration or not. And I think what we have is a really unique business model that wasn't anticipated by the legislature when the statutes were drawn up, and not anticipated by the department when the regulations were drawn up. And so I find the argument on both sides a little bit tortured, if that makes sense. Are you still there? Because everything's just frozen on my computer. Okay.
Yep. And I'm still here, and I don't know if you want me to comment on that, or if you want to.
Let me just bring up the question. I think that technically, when you were to say we bought the vehicles using a resale certificate for the purpose of resale, or we bought the vehicles with a resale certificate for the purpose of using them in our driving school, so we made taxable use, it isn't black and white. It isn't one or the other. It's actually both. So you bought them for resale, but first for use in the driving school. So it's really both. So we're talking about asking us to decide, is it one or is it the other, when it's both, and then to try to wrap the statute and regulation around that usage. So I'm leaning towards that being, by the way the law is currently written, allowing the resale certificate to exempt those from tax, because they are the final user as intended from the initial onset of purchasing them, is going to be a retailer in California. or a dealer in California. So I think we're trying to fit this square peg into a round hole, and it leans a little more closely towards the exemption. I do have a question, Mr. Whittemore, about whether or not you believe it matters that you're selling them not at retail, but you're selling them to a entity in California that is going to then resell them. So when you take your resale certificate, you're not splitting out whether or not it's going to be then sold to an individual customer or then passed on to the seller in California. Would it matter? I mean, does the department is saying that it does matter that you're not retailing them, but they're still not at the end user yet.
So Commissioner Bynum, thank you for the question. I think what is being said by the department is that our general ledger shows that the sales were to DC Motors, and that is just an accounting entry. The actual sale that takes place, the purchaser of the vehicles, DC Motors never takes title of the vehicles. So the purchaser in California or in Nevada or Idaho or Nebraska, wherever, they take title for the very first time when they register the vehicles with their Department of Motor Vehicles, and at that point they pay sales tax. So I think that is very important to understand that relationship, that DC Motors acts as a broker.
Okay, all right, that adds a new layer. And as far as the wolves and the radicals, it appears that the company may have learned a little bit about maintaining documentation and records that hadn't been maintained previously. Those records showing that their possession is taken out of state or that they're delivered out of state, I think are going to be important in the future. But unless you're able to document that, and I think you were for some vehicles, and the state has taken those off, on that portion, I'm leaning, towards those being taxable unless you can demonstrate that they were taken out, because you do have garages and you do offer people to come and use the facility to drive their vehicles. So anyway, those are my thoughts right now, and I will pass it back.
Commissioner, can I clarify something?
I'm sorry. Go ahead, Ms. Rakowski.
Yeah, I'd like to just clarify very briefly that DC Motors does not title the cars because DC Motors is a dealership. So when they purchase the car, they're purchasing it, but they will have it titled to the end user. There's no reason for a car dealership to title the car in their own name, because they're not buying it for themselves, they're buying it for resale. And that's exactly the purpose of a resale number. And I'd just like to draw your attention to 372-305, section 1, which says that a dealer who purchases and gives a resale number for motor vehicle, uses the vehicle or loans a vehicle to any person, the use or loan of the vehicle is taxable to the dealer, and the measure of the tax is the purchase price of the motor vehicle by the dealer. So since they're first using these vehicles in the driving school, which is their main business, and that's where all their profit came from, and their general ledger showed it. So their first use is in the driving school because they are a driving school. Their purpose is not to resell them. They have to resell them because they have to replace them every year. That's part of the contract with General Motors. So based on first use and that 6,000 miles and all that they are supposed to pay use tax for the use of those vehicles in Nevada. And thank you very much.
Thank you. Mr. Whittemore, can I ask you a couple of rapid fire questions that are going to kind of tag along to this? Who issues the dealer report of sale?
The dealer
DC Motors
report of sale would
the dealer's report of sale. You don't have a title to these vehicles when they're on your driving school, correct? The dealer report of sale is issued by whom?
I think I would rather have my client come up and answer that.
Trying to understand the question.
Why don't you come up here and,
When I buy a car, you don't have a title from Dolan Automotive. He doesn't have a title.
Right.
He issues a dealer's report of sale that says, I've sold this vehicle, Toyota Motor Company, to Chase Whittemore.
Yeah.
Who issues that dealer report of sale?
I think to answer the question, are you relating to the MSO? We get provided an MSO.
Could you please identify your name for the record?
I'm sorry, Dave Petrie.
Okay.
And spell your name for the record.
Dave Petrie, Petrie.
Thank you.
yeah.
Go ahead. So MSO then,
So they get an MSO from the manufacturer.
which stands for what?
Manufacturer.
Statement of origin.
Of origin.
Yes, right.
Okay.
And then when.
We all know where the car came from. It came from Chevrolet.
Yeah.
I mean, that is not my question. My question is, when I get a title from the state of Nevada, the dealer sends a dealer's report of sale that I've sold a vehicle to someone, and here's the serial number. You create a title for me that I bought that car. Who does that?
That would be DC Motors.
Yeah.
So DC Motors is the broker.
Correct.
And they're the ones generating that dealer report of sale.
Correct.
Okay. What's the cost for me to come to your driving school? I want to drive a car. Vivian Rakowski shows up at the front gate. I want to drive a car. What does it cost me to drive a car?
The test drives, if you just show up and want to take a test drive, that would be free.
So the driving school, but you
Driving
said
school.
this is a driving school.
Correct. So the driving school comes with tuition and you pay a tuition, some of which, if you already have bought a Corvette, GM will subsidize some of that.
But you guys set that up.
We also set that up. So there are fees with different courses. If it's a 3-day fee, it comes with a higher price. So it's anywhere from, correct me if I'm wrong, $1,000 to $4,000.
Okay. Okay.
So yes, there's revenue generated from the driving school.
Are there any sales stickers that any dealer is required to have on your windows of any of those cars?
No.
There's no sales stickers ever. Do they show up with a sales sticker?
The manufacturer sticker of the vehicle?
What vehicle, what's
Yes, they should.
on there? You take it off.
Yes, and it's placed in the car. Yes.
Take it off and you place it on the car.
Every vehicle. has
Okay.
that. Yes.
Okay, got it. Ms. Rakowski, here's my question. Do we have any other driving schools?
I'm sorry, Chairman, I couldn't hear your question.
No, that's okay. Ms. Rakowski, do we have any other driving schools in the state of Nevada that have cars that, and do a similar type of business? Are they charged a use tax for the fee, the $4,000 fee for my 3-day course? Would that be subject to a use tax?
Well, I believe it's the first use tax under 370, under NAC 373-305, because if you purchase any equipment, it doesn't have to be a car. It could be anything that you're using in your business. And if the first use of that item is in your business and then you subsequently sell it, you are subject to use tax. That's the object of use tax. You're paying for that vehicle. Now, the measure of the use tax, according to the regulation, is the cost of the car to the person who's using it. Now, it's very interesting with Spring Mountain because they're buying these cars for 40% under what any other Chevrolet dealer would pay. But in exchange, not only do they have to operate the driving school, which GM subsidizes part of the tuition for, but then they have to present all this advertising. And there's a tremendous amount of advertising for Chevrolet that has to be on the track. And that's all part of this promotional contract. Now, at the time that the auditor performed the audit, we did not have the contract. And he didn't realize that there was a barter element. So in actuality, the tax that the department is asking to pay is only on the 40% of 60% of the price that they should be paying. And the other 40% that they're actually bartering for, there was no tax even assessed for that because the department didn't even know for that. So it's just a very, it's an unusual business, but the bottom line is no matter what they're using, if you buy anything that you're going to use in your business and you use it and you subsequently sell it, you have to pay the sales tax on it or use tax on it. And that's the way the regulation reads.
Other questions from any of the other commissioners?
Yes, it's Commissioner Lippman. I appreciate council pointing out that at this point, we're reviewing the administrative law judge's decision. And so the standard of review has been set forth as in the documents. We've seen it in several different places. And so that standard of review, as you've indicated, council, is quite high. It's arbitrary or capricious, and abuse of discretion. And so we have to review this matter at that level. I also want to assure you, council, that the administrative law judges in the Department of Tax are not looking for tax revenue. So they look at the record and they are, of course, have a professional duty, and they're not making these decisions looking for tax revenue. So I just want to make sure you understand that. Thank you.
Thank you, Commissioner Lippman. Other questions from other commissioners?
Mr. Chairman?
Commissioner Johnson.
Yes, I had a few questions. Council, is there any common ownership between DC Motors and Spring Mountain Driving?
No, there is none.
And in your brief, you call them an intermediary broker. Can you describe that? I mean, is there any other revenue or anything that they gain other than the fact that they resell the vehicle?
Well, we take the profit on the sale, and they take a small percentage as a brokerage fee for handling the paperwork and making sure that the person has the financing, and the person when they go to do a trade-in, they handle all that. So that's what I mean by intermediary broker. They have been doing this a very long time, and they are close friends. The owner of DC Motors and the owner of Spring Mountain have a long life friendship, and that's where this came out of, was that friendship. And the fact that Doug Ramirez, DC Motors, they do this well, and the results have been working for a number of years. We sell between 3 and 15 Corvettes every single month with the help of DC Motors as our broker. And so the proof is really in the pudding, in the results, why we're holding these cars out for sale. That's what the regulation says. If you're displaying and demonstrating while holding it out for sale, it's a non-taxable use. And we're constantly holding them out for sale because what that means while holding out for sale means, are you doing it regularly? Are you making sales regularly? Are they customary in your business? Yes, we meet that standard. We meet those elements and that definition. So all three of those elements are there.
So when you say they receive a small fee or whatever for handling that, what type of fee do they receive on an average transaction?
$2,000.
It's always a flat $2,000?
Correct.
And what type of license does DC hold? Do they hold any type? Are they
They're a licensed dealership they're a licensed dealer in California.
Okay, so on the actual paperwork between to the buyer, is the seller DC Motors or is the seller Spring Mountain?
I don't know if I have that information, Commissioner Johnson, and I'm sure had we anticipated that being an issue with the administrative law judge at a hearing, I'm sure we could have gotten that information on the record. But at this point, I don't have that information.
Does your client?
I mean, we sell the car. I mean, DC, as a broker, he sells it for us, basically.
So So to effectuate the sale, DC Motors is acting as the broker. And so I think on the report of sale, what Chairman DeVold was saying from California, it would be DC Motors on that.
Okay. And in your brief, it said that the cars are bought by Spring Mountain from Pahrump Valley Auto Mall. Is that correct?
Yeah, so the actual transaction goes through Pahrump Valley Auto Mall as the licensed franchised Chevy dealership in that area of the state. So GM and Chevy have regulations of their own, and the cars have to be shipped there first to Pahrump. We order them through the manufacturer. We order all the cars we want, all the different makes and models, all the different paint colors, all the different seats, everything else from the manufacturer. They build our cars to our specs, and then they ship them to Pahrump, and then we get them from the Pahrump Valley Auto Mall.
So you pay Pahrump Valley Auto Mall, not GM?
I think the bank, yes. I mean, that's how it would go. And then they would just pay whatever we paid them to GM Chevy. In other words, Pahrump is not taking any, there's no value being exchanged by Pahrump.
Why does Pahrump do that if there's no, how do they make any money off of this transaction?
They don't make any money on it at all.
Is there common ownership between Pahrump Auto Mall and Spring Mountain?
No, sir. No, it's simply because GM and Chevy are requiring them to do it that way per their agreement, per their franchise agreement.
A question for Ms. Rakowski. This is kind of a hypothetical. If I'm a car rental business, when I bring those cars in that I'm going to rent for a period of time, I would then pay use tax on that. Is that correct?
Yes, or sales tax. If you purchase them, yes. Or even if you lease them to release out, you'd be paying sales tax. They don't use their resale number. Spring Mountain chose to use a resale number, but they could have just as easily paid the sales tax at the time of getting the cars.
Right.
Because they were not purchasing it for resale.
Right. Okay.
Thank you.
All right. That's all the questions I have.
Any other questions? I don't see any. Is there a motion or any conversation that any of the commissioners would like to have at this point, stating their position or otherwise?
Mr. Chairman, Commissioner Byram, forgot my name.
You almost said Rigby, didn't you?
I did. I know. I got my thought is this: I would uphold the decision with the exception that it needs to be clarified that the fuel tax component is removed, and with the caveat that the regulations are unclear as to this specific situation, that perhaps our regulations need to be clarified whether or not the exception applies as far as the demonstration, and whether this qualifies as demonstration, whether the resale certificate was improperly used. But I think that's as far as the performance cars. As far as the race cars, I believe that documentation would have been appropriate and could be maintained for that to be clarified for future periods. But that would be my thoughts about it. I don't like it. I'm a little confused because it is a tortured analysis. It sort of makes sense both ways to me, but I think it's because it's a unique situation and not clearly anticipated when the regulations were written.
So I will second that motion, and I think the motion was to accept the ALJ's decision subject to removing the fuel tax assessment. And that, of course, we always want the department to have clear regulations, and that can be on their to-do list, which I'm sure is very long.
Any other discussion, Commissioner Brown?
Thank you. I'm a bit confused on the motion, to be honest with you. I thought what Commissioner Byram was saying was that her position was that we should not assess the tax on the Corvette line, and we should update the regulation to be more clear going forward. But that's not what I heard Commissioner Lippman say is the restatement. So maybe someone could clarify.
You know, could I maybe try and jump in there? I think it wasn't that. At least what I heard. So what I heard was Commissioner Byram is saying we uphold the administrative law judge's decision with the exception of taking out the fuel tax on vehicles that are not used on public highways. Is that a fair statement?
Correct.
So uphold the decision in its entirety with that caveat accepted.
Yes, that was my understanding.
Commissioner Byram?
That is what I meant, although I am not really happy with it as far as the Corvettes.
Okay, so I've got a motion and second to that effect. I'm going to comment on it as well. I'm with you. This is not clear in the regulation, in my view, at all. Mr. Whittemore, you're at the legislature all the time. This one feels like this needs additional clarification inside the Nevada revised statutes, because you know where I'm kind of landing is you've got to have these cars to be able to generate the revenue for the driving school and to generate the downstream revenue to get the cars sold eventually. And I understand that, but I'm with Commissioner Byram. I'm not happy with how this is structured at all. But the way I've read the regulation, I've read the majority of 372 relating to this, and there's no real clear direction inside this. So upholding the administrative law judge's decision is about the only way we can go about that. I guess we could remand it back to the administrative law judge, but I think that would be a circular exercise for all of us. And I'm not sure that that's really where we need to go with this. I think this is a legislative problem, not addressed inside the Nevada revised statutes at this point. So I'd support that motion just on that front. And I, even though I don't like it at all.
Do you think I could have just 1 minute with my client to discuss the remand idea? Because I don't know if that might be in the best interest of everyone, given that there are additional things we could do to put on the record that show and maybe make this a little bit more clear.
I'm totally fine with that. Let's take, we're due for a 10-minute break anyway. Let's do a 10-minute break. We'll come back. I've got a motion on the floor. If it's okay that we hold on that motion for a bit, or could you rescind that motion for me before we break? Commissioner Byram?
Not like to rescind the motion. I think we've spent a lot of time on this matter, much more so than relative to other matters.
And this is Commissioner Byram, and Mr. Chairman, I would rescind my motion and
Okay, so I need, since I don't have a motion anymore, I no longer have a second either. So we'll reconvene and then come back with another and a new motion. So, all right, we've got 10 minutes here and we'll come back.
Thank you very much.
Okay, let's go ahead and get started again. Commissioner Lippman, all of the commissioners, is everyone back? Commissioner Byram? Okay, it looks like we've got everyone back. We'll call the commission meeting back to order again. Do you have a response from your clients?
I do, and thank you so much for giving us this time. We do really appreciate it. And speaking to my client, I think there are opportunities. I think there are opportunities that we could have. We could call DC Motors and Doug Ramirez to a second hearing, get more documentation, and we can also clear up that the course isn't closed. I think that is an issue that the department was still, I think, confused about, that it is open to the public. I think we could probably do that on remand and clarify that. And I think that would go a long ways to helping my clients in this situation. And I really appreciate all the comments and Commissioner Littman, I apologize if I came off as saying that the administrative law judge did not do a good job. She did an excellent job. I think she's very professional. I've dealt with Ms. Smith, Judge Smith numerous times, and she is very professional and very good at her job. And I think I was just talking about the department sometimes, sees it with blinders on one way. Not necessarily ALJ, but in this case, like I said, with the racetrack being closed or not, I think when you see guard gate, you just assume that it's closed to the public when in fact it's not. And so that's what I was referring to on that. But again, I appreciate all of your time very much.
I think the main thing to me on the remand would be don't plow the same field here. You've got to have brand new information and contain it to that brand new information. And, don't go through the hundreds and hundreds of pages. I think you've got very specific issues that are unclear, that haven't been answered. And that would be the only reason why I would support that. So with that, is there any other conversations or other motions to that topic?
This is Mr. Chairman,
Commissioner, can I respond? Chairman, would I be allowed to respond?
I'm sorry, I don't know who that was.
I'm sorry, it's Vivian Rakowski.
Oh, yes, please.
Yes, I would like to respond. During the 10-minute break that we took, I went and found out about other driving schools in the state, and also about and I can't mention any other taxpayers, but there's a very large operation in this state that does something very, very similar to Spring Mountain. And they all pay use tax on the purchase price of the car, or they pay sales tax at the time of purchasing it. This is the only driving school that is arguing that they're demonstrating vehicles. They're not. The word demonstration, you're doing it through, I can demonstrate anything, but what they're doing, their business and their prime source of revenue is teaching driving. And these cars are an instructional tool the same way that anything else can be used as an instructional tool. And I don't feel that the sale to DC Motors is even relevant because it's not a taxable sale. They're selling them to DC Motors for resale. That's irrelevant. The issue is the first use of the vehicle. They're ordering these vehicles. They're improperly using a resale number because they're not purchasing them for resale. They are purchasing them to use in their driving school. But if your commissioners believe that a remand for information that's really not relevant to the issue of the first use, then that's fine. I mean, it's what the commission does. But if you have any questions of me, I'd be very happy to answer them. Thanks for allowing me the time to rebut.
Thank you. I'll bring it back to the commissioners. Any other comments, questions of either the taxpayer department, or are there any motions?
This is Commissioner Witt. I guess what I'm confused is, as we started out, I heard council talk about how we were listening about a dealership, and then we talk about how we are a driving school. And my thought is that it's advantageous to kind of be both, a hybrid of both. I think that we need to make a decision that it's got to be one or the other. I think that without, I mean, we milked Holstein cows and we milked them. They're black and white. These guys are driving mostly Corvettes. I'd probably prefer a Viper. Whether that's relevant or not, I don't think you can be both. I mean, I think you can have a dealership that has a driving school, but it does make sense is that you won't have a school without vehicles to drive. So it's, but I'm also confused in where the tax burden lies. And these vehicles are, the point of sale is something we've discussed in the past. And it sounds like people are making a decision to purchase after driving because I think I heard the comment about their hair being on fire. And if that happens in Pahrump, then it's a sale in Nevada, and that's where the tax would be due versus transferring it to a California dealership. So I'm not able to make a motion, but I would support the ALJ, the administrative law judge's decision. Thank you.
This is Commissioner Bursey.
Commissioner Bursey?
I do not favor a remand. I agree with Commissioner Littman that we've spent a great deal of time listening to the arguments. Both counselors did a great job, but I favor the arguments of Ms. Rakowski. And so I will, if I could make the motion, I'm going to just make the motion. I move to uphold the administrative law judge's decision. And I would also like to incorporate Commissioner Byram's suggestion that she revise the final decision to make it clear that she's not making a decision on the fuel tax.
Okay, thank you.
Commissioner Wren, I checked that.
Motion. Commissioner Littman seconds the motion. And so the motion is to uphold the administrative law judge's decision, however, not the assessment of the fuel tax.
Yes.
Understood. Thank you, Commissioner Littman. Is there any other comments? Okay, I'll take a roll call vote. Commissioner Bursey?
Aye.
Commissioner Byram?
A reluctant aye.
Yes. Commissioner Brown?
No.
Commissioner Witt?
Aye.
Commissioner Wren?
Aye.
Commissioner Johnson?
Aye.
Commissioner Littman?
Aye.
Motion passes. Commission upholds the administrative law judge's decision and amends the requests amend the ruling on the fuel tax on vehicles not used on public highways. Thank you for your time,
Thank you.
taxpayers, and Mr. Whittemore. Director Young, the next item on the agenda.
Thank you, commissioners.
Thank you. Melanie Young, Executive Director, for the record. The next agenda item under this topic, which is a taxpayer's appeal of administrative law judge's decisions pursuant to NRS 360.245 and NAC 360.175. It's item number 2 under this agenda topic, American First Investment Group doing business as Las Vegas Auto Auction, Super Auto Sales, and the Department of Taxation has Vivian Rakowski, Deputy Attorney General, available. Thank you.
Good morning, Commissioners. Vivian Rakowski from the Attorney General's Office of the Department of Taxation. I'm not sure if there should be an attorney on the other side.
Good morning.
Yeah, this is an appeal, so I'd really rather start with the American First Investment Group. If there's somebody on the line from that, this is their appeal. I think they should start.
Yes, this is Attorney Tom Michaelides. I'm not sure. Can I be heard?
You can. Could you state and spell your name again for the record, please?
Yes, sir. Thomas Michaelides. Michaelides is Michaelides. And I have on the line our witness, Bill McCarthy. He's a certified public accountant. McCarthy is McCarthy, and he's going to present our argument as to why we believe the administrative law judge's ruling was arbitrary and capricious.
This is Mr. McCarthy. Can you hear me?
Yes, we can.
Okay. Well, I didn't know I was going to be leading this, but this relates to an audit of a local used car sale. The taxpayer had filed for a refund over a period of time. The refund was claiming about $10,000 as a refund. He filed that without the assistance of my office. Once that refund was filed, the state audited him, and the state came back in and made adjustments to that audit, some of which we agreed to, and that was done during the court hearing. The main big issue here is interest that's been charged on these loans. The state is not allowing the recording of interest on these loans. So by way of just an example, I don't know what you have in front of you as far as the court case. I sell a car for $15,000. I pay him $600 a month. The first year goes swimmingly. He makes the payments. So now we've spent $7,200 in payments. The principal balance is now $10,000. The rest of it has been posted to interest. Now the buyer stops paying. And so next 2 months, 3 months, interest is accrued. Now the balance on the loan is $10,500. They repossess the car. What is the bad debt deduction? What's that number? In our case, the bad debt deduction was $10,000, the principal balance of the note. We cannot deduct the additional $500 of accrued interest, accrued and unpaid interest. We're just deducting the $10,000. The auditor said, no, you have to apply all $7,200 to the balance. So now your write-off is not $10,000, is now $7,800, giving no effect to the interest. That's the crux of the issue, as to whether, now they reference in here NRS statute that talks about 372.368. Number one, if the retailer is unable to collect all or part of the sales tax of the sale, the retailer is entitled to receive a deduction from his or her taxable sales for the bad debt. Number two, any deduction is claimed may not include interest. That's the key issue here. What they're talking about is accrued and unpaid interest, not the payment that was made during the course of the loan when it was being made. The auditor is treating this as a simple interest. I can't deduct, I can't claim any interest, and he's reducing the bad debt deduction by the full amount of the payment, not just the principal reduction. Now, the administrative law judge, do you guys all have this in front of you?
We do.
Okay. They're talking about, one of the cases they were talking about was a low transaction. Now on page 6, you go to line 9. In the low transaction, the business paid $503.33 in sales tax, but the transaction history showed a bad debt refund was $1,734.85, meaning the business ought a credit of more than it paid in tax. First America did not dispute this. I disagree with that wholly. We didn't claim a deduction of $1,734.85. We wanted to claim a bad debt of that. The tax on that at 8.25% is $143.12. We didn't claim a bad debt, give me back $1,734. We said, give me back the sales tax on that. The taxpayer used it. It is a nationally syndicated selling point of sale system that tracks these transactions. It accounts for interest. It accounts for when the debt goes bad, you're not claiming tax on the tax. This thing is a very robust computer program. And I don't know, I've been doing this for 30 years. We've had, this client's been audited before. We've had other sales, used car sales to have sales tax audits. This issue has never been raised. That says you can't claim any of the interest that was paid in the course of the loan being made. It makes no sense. I'd like to say, this is one small guy that's assessing $30,000 in tax over 3 years mainly because of this one issue. There were other issues. We agreed with those issues. We actually made a very deep, we went through every transaction for all the 3 years, gave the auditor a schedule and says, here's the real number. This is what we came up with, which is basically like a refund of like $2,900 for the client, not owing $32,000. Think Walmart, Target, Home Depot. Are you telling me when Home Depot sells a refrigerator to me and I make payments for a while and I then default and they provide credit, that Home Depot now has to add back the interest on that credit card and reduce the basis of their bad debt by that amount of money? This is one small guy, $30,000. If this was across the board, this would be a huge, huge issue. I mean, it can't be right. When you say you cannot deduct the interest, it's accrued and unpaid interest. Not the interest has been paid in accordance of a financing agreement that was agreed to by the buyer and the seller. That's the crux of it, is he is reducing the basis of the bad deduction by all of the payment, ignoring the interest charges.
Thank you, Mr. McCarthy. Ms. Rakowski, do you have a rebuttal?
Yes, thank you very much. The purpose of the bad debt statute is only to allow the taxpayer to recoup the sales tax that was remitted to the department on the uncollected sales price. Sales tax, which they included in some of their bad debt, is not part of the sales price, nor is interest, nor is the retailer's cost to recoup and refurnish the vehicle after repossession, which they also included in their bad debt deduction. In addition, the price achieved when the car is resold must also be deducted from the bad debt claim, because bad debt is limited to the uncollected sales price. Now, Nevada tax notes in 2013, which is part of our exhibits, explains the deduction, and it's our base page 406. It details a sale of $5,000 where the purchaser paid $1,000 down and then made 2 monthly payments of $500 for total payments of $2,000 before defaulting. The department credited the full $2,000 towards the sales price, did not credit it towards the interest, so the retailer was allowed a $3,000 deduction in sales tax return. The chapter 372, 368 is very specific as to how to apply the statute. And if it's correctly done, taxpayer will solely recoup the amount of overpayment of sales tax. As a result of the inflated amounts that they took for the bad debt deduction, when they were audited, they ended up with a sales tax deficiency, and that's how the deficiency comes. Now, the taxpayer has raised a few issues that would be better addressed by the auditor who performed the audit, and I have him here, Mr. Daniel Chappelle, who is going to explain 3 things. First of all, why the audit took a long time to complete, because these are items that were brought up in the late filed brief by the taxpayer. Why the audit took a long time to complete. Why the original audit only used 1 month, and why when the 2 other months were provided during redetermination, only 1 of them was used. And he's going to explain why the taxpayer's use of the Fraser software was inaccurate, and that they had to review the entire deal jackets and trace each vehicle in order to figure out the transaction history. So Mr. Chappelle will explain this now.
Yep. Please, the commissioners, my name is Daniel Chappelle. I'm an auditor for the Nevada Department of Taxation. I was responsible for finishing this audit as well as representing the department in the hearing and redetermination. We took an original 3-month sample of the taxpayers' detailed records in which we got deal jackets for the cars that were sold, as well as requested deal jackets for the cars for which were written off in those periods. That took an additional amount of time because we had to go back to the original taxable sale for the cars that were written off in those periods. And often those cars were sold in a different previous period. So we had to allow some extra time in order to get those documents. And the reason that we started with the original deal jacket was because we needed to establish what was the actual taxable amount of the sale. The taxpayers' software reports that they're referring to, their payment history reports, really calculated a loan balance going forward that included interest, finance charges, sales tax, and other non-taxable charges. So from just using the software that the representative is referring to, we couldn't reestablish exactly what was the taxable amount of the sale that was reported for that vehicle. So when we allowed for that additional time, we got the deal jackets, the payment histories, and really the bad debt is explained very clearly in the statute that we start with whatever bad debt deduction would be allowable under Internal Revenue Code 166. And then we subtract the interest that was paid as part of that sale. I mean, the statute is very clear on that. And the effect of that would be to allocate the total cash payments that were made during the course of the loan to the taxable sale price. It's important to remember that when we establish the original taxable sale, that original taxable sale does not include the interest, the sales tax, and any non-taxable fees that were part of that sale. So for the reasons that were adequately explained in the hearing decision, we couldn't just rely on the taxpayer's software. We had to go back and actually ask for the additional source documents related to the taxable sale. We took that approach in order to establish a percentage of the taxpayer's bad debt that was valid. It's important to be clear here that we are not completely denying the taxpayer's bad debt deduction. What we established with our sample periods was that approximately 43% of the bad debt deduction claimed was actually valid bad debt. And if you have about a 30% interest rate on a car and you're including also sales tax and everything else like that, that ends up in that ending bad debt deduction, that percentage actually is very reasonable. So I guess, do we have any other questions?
So you explained it, the Fraser, maybe the commissioners have some.
Yeah, are there any other questions for me?
Why don't you hold on? We'll go back to Mr. McCarthy. Do you have any rebuttal to any of those comments?
Yes, I do. When they say that they're charging sales tax and the sales tax, that is incorrect. We showed the schedule here that when the bad debt was written off, they backed out the sales tax. Because what they're talking about is, I make a sale, I charge the sales tax, I charge the fees, here's a balance what the customer owes. He makes maybe $1,000 down payment. And yes, now that is the balance for the loan amortization that we worked upon. So when that loan amortization is being paid down, when it actually went bad, this Fraser software backs out the sales tax. So we're not charging tax on tax. That's an incorrect statement. There was, the other things, the repo fees and the other errors that they made, we agreed to those. And we actually redid the schedule, did all the work for the auditor, didn't look at it, didn't even consider it really. But we agreed to those changes, we're not contesting those. What the auditor did was say, I'm gonna take that loan balance and I'm gonna deduct the payments. That's the balance of your loans you could do for a bad debt. Whatever that loan was, took off the payments and said, that's the balance, completely ignoring the interest charges on the loan. That's incorrect, period, end, that's incorrect.
Okay, thank you, Mr. McCarthy. I'm going to.
One more thing, if I could say.
Please.
When they're talking about what is a bad debt deduction on the IRS, what do you take as a bad debt? Use my example that I used previously. The principal balance of the loan was $10,000. They accrued interest of $500 over 3 months. Accrued that interest and recorded as income because on an accrual basis, as I earn the interest, I'm going to record that as income. So now my write-off is $10,500. In the state that says you don't get to write off on tax return, I'm writing off $10,500. The principal balance of my loan plus the $500 of accrued interest. The statute says you don't get to write off $10,500, only $10,000, not the interest that was accrued on that loan. That's what NRC statute is talking about, is accrued and unpaid interest. The auditor took all interest and deducted it for the whole paid and interest, not just the unpaid interest. The principle there is you don't get to write off 10,500 for sales tax. You only get to write off the principal balance on the note, what was unpaid of the original purchase price for the asset itself. And that balance in this system does not include the sales tax.
Thank you, Mr. McCarthy. For the benefit of other commissioners, I've kind of done this a couple of years, having been in the banking business for almost 40 years now. 372.368 is extremely clear. And there's two key words I want to make sure everybody hears. So I'm going to go to 372.368 subpart 3. And I'm going to read a couple of those. And we're just talking about the deduction that you can claim. Okay, I want to make, forget about the amount financed and everything else. All I'm talking about is what you can claim as bad debt. So in there, it says the amount of the deduction claim must be equal to the amount of deduction that was claimed pursuant to subsection 166 of the Internal Revenue Service Code for that sale, keyword minus any, another keyword, any finance charge or interest charged as part of the sale. The conversation's over right there. It's over. Any finance charge or interest as a part of that sale.
Works for me.
My part's over. And like I say, you've got other things that you deduct through that calculation to help you generate whatever that deduction might be. The sale of the vehicle actually reduces your loss. There's plenty of things they add back in the sales and use tax charge, so that reduces part of your loss as well. But I'll be honest with you, 3A, part 3 and A, it says minus any finance charge or interest charged on the sales price. Any. I mean, it's not exclusive to, gee, I collected it for a year in a row. You add that interest back in. That's part of the deal. So, from my standpoint, the regulation couldn't be more crystal clear. So, from my point, I would uphold the administrative law judge's decision because I think it is 100% correct, and I've done it for 40 plus years. So there's my spin.
I make that motion, Mr. Chairman.
Thank you.
Hello?
I'll second the motion, but I would like to, I agree with you, Chairman, and I actually think the relevant language, I'll put on my law professor hat, is in,
Please do.
okay, is in NRS, and I'm also a CPA, so I do want to appreciate Mr. McCarthy's attention to detail and providing the documentation because too many taxpayers don't. So I appreciate the CPA being involved. And I do agree with you, Mr. McCarthy, that this is a little bit unusual. However, it's because it's sales tax, not a bad debt deduction against profits. See, this is sales tax just to offset the sales tax.
Exactly.
And so if you look at 372.3688, it says for the purpose of reporting a payment received, the payment must first be applied to the sales price of the property sold. So that is exactly what they did, the Department of Tax did. So you don't apply in typical amortization on a loan, as the chairman knows, you apply the payments to the interest. Here, the statute expressly says you apply it to the sales price, not any interest accrued. So I agree with the chairman. I think it's very clear. And it's because the purpose here is sales tax to offset the sales tax. Otherwise, you could have overstate the credit.
So I've got a motion and a second. Is there any other conversation?
Mr. Chairman, Commissioner Byram.
Yes.
I completely disagree with the audit assessment because they inappropriately used an error rate when they had 100% of the list of assets. They had the detail on every single transaction. They could simply do the actual rather than extrapolate an error rate. And now I understand that when you have an audit, and this refund claim triggered an audit, that audits in general can be done where there's a sample on the population and it can be extrapolated as long as the business itself is consistent. This business had a complete change halfway through the audit period in their business model, where they no longer had the lot, they no longer had all of the vehicles that they were selling to the public, and then they changed to where they were auction only for almost all of the vehicles, which changed it. At that point, I would have separated it and made two separate populations to sample and extrapolated only within those populations. But that is for the audit itself. For the refund claim, you would then add on or subtract from the audit results by verifying the refund claim. And it's not like there are so many that they couldn't look at them individually. They've already acknowledged they look at every single deal jacket. They could simply prepare a spreadsheet with a finite list of assets. They could show the principal. They could show the remaining principal, excluding the sales tax, excluding the repo costs, excluding interest, and compute the tax based on what both parties agreed to. It should not have, and I don't know, the other party doesn't agree that the interest should not have been, that the payments should not have been applied partially to interest, but I think we've clarified that in the statute that was just quoted. So my objection is that they extrapolated an error rate incorrectly, and I could not support the upholding the decision for that reason.
Would it be appropriate to uphold the administrative law judge's decision and ask the taxpayer to provide that information through a offer and compromise solution?
My thought on that, and we can have Ms. Rakowski chime in, but in the decision itself, it states that using extrapolating the sample
I see.
for the refund was appropriate, and it was not. So I would object to that.
Thank you.
Chairman, I'd like to respond briefly.
Yes.
This audit took an extensive amount of time because getting these deal jackets was very, very difficult because some of the cars were sold years before the audit period, but there were payments made and the bad debt was taken during the audit period. So they had to go back, find the deal jackets, and then some of these items were resold at a later date too. So getting all these additional information, that's why the original audit, they agreed to using 1 month. When they saw how the 1 month was extrapolated, how it came out to like 45%, they said, let me give you the other 2 months, which they initially refused to give to the department. So when they gave the 2 additional months, one of the months, they gave all the deal jackets and Mr. Chappelle was able to do the audit. The second month that were not able to use, they didn't use to benefit the taxpayer because there was 1 sale and 1 bad debt, and the 1 bad debt was asking for more sales tax than they had actually paid in originally. So he took out that month as an outlier because that would have been a 0%. That would have been extrapolated into the 40% and the 45%. So, to do an actual audit for 3 years, to look through 3 years of every single sale and to have the accountant gather all that information would be extremely burdensome. But, the commission can make any determination that they feel is appropriate.
You've told me that before. Thank you.
May I clarify?
I think that's exactly where I'm going with this.
May I clarify?
Yes, please.
I appreciate the amount of time it took to gather those deal jackets, but nevertheless, they did gather them. And I'm not saying that that the audit results, separate from the refund request, I'm not saying that the audit results were incorrectly done based and using a sample and extrapolating the sample. I'm not happy with it because it wouldn't have been done the way, if I were the audit manager, I wouldn't have done it that way because there are two separate business models within that audit period. But nevertheless, ignoring that, yes, leaving as is the 3 year or the period that was ultimately assessed, leave that as is. The taxpayer said that they agree to that. But for the refund request itself, that as a separate set of deal jackets that have been put together, the time has been spent, those are already acquired. This could be done on an actual basis and is incorrect. And I think as Ms. Rakowski explained, there are so few that it does give outliers. It does give incorrect results when you pick and choose a month to extrapolate. It doesn't need to be extrapolated. The information has been gathered to do it on an actual basis for the refund. You've already established that within a certain amount, they've got a little bit that they owe otherwise. And just for purposes of the refund request, that should be done on an actual basis. It's technically incorrect. I would say it's impacted by error, clear error.
So I've got a motion and a second on the floor right now to uphold the administrative law judge's decision. Why don't we go ahead and go through that vote? I'll ask for the vote. And obviously, if that one is defeated, then I will ask Commissioner Byram to submit another motion. So the motion on the floor is to uphold the administrative law judge's decision at this point. Commissioner Bursey.
Aye.
Commissioner Byram.
Nay.
Commissioner Brown.
No.
Commissioner Witt.
Aye.
Commissioner Wren.
Aye. Commissioner
Johnson.
Aye.
Commissioner Lippman.
Aye.
Motion passes. Administrative law judge's decision is upheld. Now,
I'm not sure you asked for Commissioner Witt's. Was Commissioner Witt called?
Yes.
Yeah.
Oh,
He
I'm
voted
sorry.
yes.
I apologize. Okay, thank you.
Okay. Administrative law judge's decision is upheld. Thank you. Next
Thank
item
you for
on
your
the
time.
agenda.
Thank you, Melanie Young, Executive Director. Moving on to the next agenda item under this topic, which is the taxpayer's appeal of administrative law judge decision pursuant to NRS 360.245 and NAC 360.175. The third agenda item under this topic is Eagle Gas, and the Department of Taxation has Natasha Gabriel from the Attorney General's office available. Thank you.
Taxpayers appeal.
Very good. Could you state your name and spell it for the record, please?
Mohammed Ahmad, Mohammad, last name Ahmad, Ahmad.
Okay, this is your appeal of an administrative law judge's decision. Go ahead and make your case.
So I thought it's gonna be live like that. I didn't know that it's gonna be something like that. I don't know how to use this technology. I don't have the laptop. I don't have anything.
Speak into the microphone and they can hear you.
Okay, so I thought it's gonna be like this live, everybody sit there.
We are.
But no, when this thing happened and it was on the computer or something like that, and I don't have this technology to use that, or I don't know how to use that.
You don't need to. You're appealing an administrative law judge's case, so go ahead and make that case.
Mr. Chairman, I think what he's saying is they did his original hearing via Zoom.
Yes.
And he didn't have the technology to
go
do
that when they was doing something in Las Vegas.
So the administrative law judge's decision was
because
without your testimony. Is that what you're saying?
That is correct.
Thank you. Is there anyone from the staff that can speak to this issue for me? Is it Natasha Gabriel, Deputy Attorney General?
It looks like she's speaking, but we cannot hear her.
Natasha, it looks like you're speaking, but we're not able to hear you.
She said 1 second.
1001, 1002.
Hello, can you hear me now?
Yes.
Okay, great. Sorry about that. Natasha Gabriel for the Nevada Attorney General's Office on behalf of the department. Thank you, Chairman and Commissioners. I'd like to point out that in May of 2020, we all the parties, that would be myself, ALJ Hansen, Christina Gentile, and the taxpayer, Mr. Ahmad, participated in a telephonic pre-hearing conference, and it was telephonic due to the ongoing pandemic. In that telephonic conference, ALJ Hansen explained that the hearing would be conducted via Zoom unless there was an objection by the parties, or if they needed for some reason to appear live. And Mr. Ahmad participated in that conference and stated that Zoom was fine and he was able to proceed via Zoom. And then we went ahead and she gave us a few dates for September 2020 for the hearing, and Mr. Ahmad and I convened and said we would get a specific date to the ALJ. Once we spoke separately, we then set the hearing for September 29th, 2020. And ALJ Hansen then issued her order, and it had Zoom instructions, and the order stated that the hearing would be conducted via Zoom. At that point in August of 2020, about a month before the hearing, Mr. Ahmad stated that he wouldn't be able to participate in the hearing, but not because he couldn't use Zoom, it was because he was leaving the country. The department didn't have an objection. We didn't want to complicate matters for him and trying to get Zoom when he's not in the country. So we went ahead and asked ALJ Hansen for more dates that would be available for Mr. Ahmad when he returns to the US. ALJ Hansen in September then provided us with 5 dates. I convened with Mr. Ahmad via email and gave him our availability between witnesses and myself. And Mr. Ahmad was not available the same times that I was available and that the department was available. So I went ahead and requested more dates from ALJ Hansen, and she accommodated our request, and we received 7 more dates, and that pushed us into 2021 for the hearing. I then convened again with Mr. Ahmad and had him pick the best date that was available, and that was February 23rd. Again, when the order was issued, there were Zoom instructions and he was added to the calendar. There was no indication at any of these points that Mr. Ahmad wouldn't be able to use Zoom, that he didn't have the equipment to use Zoom, that he was not able to follow the directions that were on the order. We had no indication that this was the case. And furthermore, on the date of the hearing, we tried to contact Mr. Ahmad to participate, and we received no response. And I would just like to note that had there been an issue with Zoom or, wanting an in-person hearing, we would have liked to hear that prior to the hearing convening. And we would have, likely accommodated the request. We had no indication. And at this point, the argument that he didn't know that it was going to convene on Zoom or that he didn't have equipment is a delay tactic. This audit started in September of 2015, I believe. Yes, September 2015, this audit started. And I would ask the commission that at some point we have a finality of judgment. And I am available for any questions that the commissioners or chairman has.
Thank you, Ms. Gabriel. So 12 dates were given to you, and at no time you told them that you didn't have a computer that could access Zoom?
They give me the dates and whatever she said, that's right. But we didn't talk about Zoom or anything like that. When the letter came, it was shows in there, and I thought it's gonna be again on the telephone thing. We did the conference call. I thought it's gonna be like that. I didn't know that this still need a computer and need all that other stuff over there.
Ms. Gabriel, on Zoom, I've used Zoom a couple times here lately, so it always has a telephone number on there as well, does it not? So it has a telephone number and a passcode to access a workroom if you don't have a computer. So you can do it on the telephone, is that correct?
Yes, Chairman. Thank you for the question. And I would like to note that ALJ Hansen's notices always had the instructions for joining via webinar, if you are able to do that, or via the Zoom app, but it also had the numbers to call in and how to join via a telephone. So it had those instructions on there, and they were very clear, and it was very explicit that this was going to take place on Zoom. And ALJ Hansen in May of 2020, when she was speaking to us, was very clear and very specific that if Zoom wasn't viable for the taxpayer or for the department, that she wanted to know at that moment so that she can schedule it accordingly, just because of social distancing rules and the pandemic at that point and how strict it was. She asked us a couple of times, if we want to do this in person, go ahead and let her know so that she can schedule it accordingly while also following CDC guidelines.
Okay, thank you. Any other questions from any of the commission members?
This is Commissioner Witt. I'm audibly hearing everything. Zoom to me is only an option to be able to see the folks that we're talking to. So I've heard enough. I would make a motion to uphold the department's decision concerning Eagle Gas.
Second.
I've got a motion and a second to uphold the administrative law judge's decision. All those in favor?
Aye.
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 Anyone opposed? Administrative law judge's decision is upheld. Next item, thank you.
Thank you, commissioners and chairman.
Thank you, Melanie Young, Executive Director. For the record, we'll move on to agenda item 6 for informational items. We have 2 topics, A and B, the penalties and interest waivers granted by the Department for Sales and Use Tax, Modified Business Tax, and Excise Taxes. And then B, approval and denial of status report log for organizations created for religious, charitable, or educational purposes. Are there any questions? All right, at that time, I will move on to agenda item 7 for the briefing from the Executive Director to the Commission. So I have just a short couple things to share with the Commission. The Department of Taxation is open to the public, and we are maintaining appointments. This is something that the taxpayers can be made online, and I think it's a great benefit to the taxpayers. We started this during the pandemic so that we could allow taxpayer access to the Department of Taxation by appointment only. However, in the past, our doors were open and they could come in anytime. And our doors are now open. They can still come in anytime, but if they do have complications with their schedule and don't want to come in and wait the time to be served, we are allowing those appointments to continue. So we're very excited for that option. As you know, the modified business tax, the Supreme Court made a decision in May that legislation from 2019 was determined to be unconstitutional. So the department has been working very diligently on processing the modified business tax refunds to taxpayers. We have had weekly communications with the Treasurer's Office, Controller's Office, and the Governor's Finance Office. And I would like to thank our Deputy Director, Terry Upton, who's been diligently working on this plan to be able to refund the money to the taxpayers. Currently, we have assigned revenue officers to work with every taxpayer account to make sure that their tax records are current and up to date. So it would require every taxpayer to make sure they have submitted every tax return. If they have a period missing, it would delay their refund. So we're putting resources on the front side of that. And we have also authorized our call center to work 7 days a week for a 2-week period right now to be able to have taxpayer outreach. They will be reaching outwards to the taxpayers as well as being able to have taxpayers reach into the department if they have questions about their potential refunds. So as you may be aware, we are looking at about 37,000 taxpayers that we will have to refund approximately $75 to $80 million. And with that, we're looking with our IT programming and staff, we'll likely be able to initiate those refunds within the next, I would say, 6 weeks. So if the taxpayers' records are current and up to date and they have a valid address on file, we will process those. The refund will go out fairly easily. However, if they are delinquent or have audit adjustments or issues with their taxpayers' account, we have staff that we are assigning to be able to do that. So as a quick legislative update, the department had approximately 35 bills and budget implementations that affect the department in some way or another. The executive team spent most of the day yesterday doing a strategic plan on how to implement the bills and what we received budgetarily. So to point out just some high level items, SB 389 implemented the peer-to-peer tax, which is similar to the short-term rental tax. This is a 10% excise tax with a 2% and extra tax for both Washoe and Clark counties on vehicles that are rented on a platform. So what this is private individuals could rent their vehicles through certain businesses that have a platform, and excise tax will be remitted on that. AB 495, which is the new mining tax on gold and silver. The department is working on getting that bill implemented as well. And then I'd like to point out SB 440, which provides a sales tax holiday for National Guard members on Nevada Day weekend. We were looking anywhere from about 4,400 to approximately 7,000 additional exemptions that staff will have to monitor and process to make sure that our National Guard members are to be able to access that. The department received 2 items of significance that I'd like to point out budgetarily, and that is the office consolidation for the Las Vegas area. Staff have been working, Terry Upton and the group have been working on trying to identify a location, and we will be consolidating our Grant Sawyer building office with our Henderson office. There's a couple options that we are looking at right now, but nothing has moved to the point of progressing in a way that we could identify and make sure that we would make an announcement one way or the other where we're going to be going. But we will be consolidating with the Cannabis Compliance Board. They will have we're looking for space that we can both utilize open meeting space, because we at the Department of Taxation have several boards and commissions, and so do they. So we will hopefully be able to have some nicer rooms set up for the hearings that the administrative law judges do for both the Taxation and Cannabis Compliance Board, as well as our meetings. So we're looking forward to that. And then Project Mint, our Modernize Your Nevada Tax. We received funding to be able to move forward with the modernizing our tax system, which I'm very pleased about. That over the next 2 years, we will move forward with implementing a provision to be able to ultimately, likely in 2 years, be able to purchase a COT solution, which is an off-the-shelf tax solution. And there are multiple vendors throughout the United States that we could choose from there, and that we would go out to RFP to secure. So if there's any questions, I'll take those at this time.
I don't see any questions at this point. Okay, thank you, Director Young. Next meeting is August 16th. Let's see, any public comment, Tina? I failed to recognize Mr. Jeff Church's public comment. Hopefully all of the commissioners received that comment inside. Okay.
And it is on the website as well. If anybody has public comment, please dial *9 to be put into the queue. I don't see any public comment.
Okay, very good. Any items for future agendas from any of the commissioners? Very good. We stand adjourned. Thank you, everyone.
Thank you.
Appreciate the time. Bye.
Oh, wait, someone's. Oh, yes, Mr. Borrega?
Yeah, I didn't hear my my offer and compromise come up at all.
Yeah, it was part of the consent agenda and it was approved.
Oh, okay. My other question, I guess, would be in her last statement about the refunds for the modified business tax. Am I possibly eligible for any of that?
Would you mind giving your contact information to Tina Padavano and we will get back to you.
Okay, thank you so much.
Stay on the line for a second.
Okay.
Jim, what I'm going to make, but it said during public comment is that we get into some of these discussions about, are we still live? Hang on.
Yes.